Hello traders and welcome back to another video. Today I want to go over the importance of psychology and being patient when it comes to trading, and we're going to do some back testing. And let me just start this video off. So I have not been able to take a trade in the past 4 or 5 days, and it used to just hurt me emotionally as a day trader, as a scalper, as even a swing trader in some cases. My goal is to be in a trade consistently, and that is actually not the right strategy when it comes to trading, which is why I want to break down some of the emotional things and barriers that I've had to break through to understand that that's actually not how you make money in the market. The easiest way to make money in the market is to be consistent when you see an opportunity. And when it comes to backtesting, I want to walk you guys through today on exactly how I try to backtest and some of the apps that I've been slowly using here and there to integrate it into my trading strategy. But first, let's break down the emotional side of trading, because I actually think that that's more important in regards to being consistently profitable and actually taking money out of the market every month. The first thing I will say is that when I first started all of this, I assumed that the minute I'm not in a trading, I'm not making money, right? Because when I'm running a business, the business is running out there, whether I'm working on the computer, whether I'm having a meeting, or whatever I'm doing. But trading doesn't necessarily work the same way, specifically if you're day trading or scalping it. If you're swing trading, it's a little bit of a different play, because what you're going to do is set up your scenario and then execute your trade over time. But when it comes to swing trading or scalping, sorry, let me say that again. When it comes to scalping and day trading, your real goal is to have the perfect setup and have that quick entry and exit as soon as you can. So the longer you just sit in the market, you're actually paying two things. One, you're paying funding fees that consistently are charging you for borrowing that leveraged amount, specifically since we're doing futures. And then second off, you are actually going to be paying more fees in trading because you're entering and exiting on a strategy that you might not have actually fully followed through with. So when it comes to trading like these situations, so right now I'm traveling, right? And as I'm traveling, it makes it extremely difficult to watch the charts. And what I never ever want to make as a mistake again is where I just check the chart for 5 minutes because I'm traveling and play a play and leave. Because when it comes to trading, in regards to day trading or even scalping, you need to be able to manage your trade, right? You need to move your stop loss accordingly. And when I'm in an area that doesn't have perfect internet, it makes it a little bit difficult. So I never recommend taking those risks if you're not available, right? If you work from home, if you're working on the go in the US even, there's really, really good internet. It's easy to make your plays throughout the day. But when you're traveling in a place that might not have internet, it makes it really difficult to be able to manage the play. So you never, ever, ever want to take a trade when you are not set up to succeed. Exit the trade, move your stop loss, and so forth, right? So psychologically, the way I've adapted to this situation is I've understood that I actually lose more money playing that way than I do just sitting on the sideline and being patient for a position to open up, right? And when it comes to back testing, let me walk you guys through exactly how I tend to do that. And you can use any strategy that you have that works to your advantage. We're going to go over the Fibonacci Bollinger Band envelope strategy that I look for. And we got to remember that one is a specific reversal strategy. The reason I like to backtest it is because it shows that it works in different market conditions, and it will show you the market conditions that it's not working well for. Also, make sure you guys are subscribed to the channel. It's been really cool watching the subscribers go up and you guys having great questions. That's why I'm doing these videos, keeping us all accountable and watching my trading journey through here for you guys to see as well. So please click that subscribe button if this video helped you. Share it for another trader that needs to nerd out and have a better probability of success as well. So please don't hesitate. But let's pull up the charts. So when it comes to backtesting, it is very, very, very easy to do. A lot of people just don't do it right. And what I say by don't do it right is that they don't actually give themselves time to backtest. And a lot of times you guys, like, if I'm in a trade or if I'm traveling and I'm not in a trade, people just think, all right, that's missed time. I never ever look at it that way, right? I always look back at the backtesting. It's been a long week of travel, so I've got all of this backtesting data we can play with. I first want to pick an asset, and in this concept, we're going to pick Ethereum just because Ethereum has high liquidity and I can use high leverage, obviously. So the first thing I want to look at is I'll come back here of where did I stop, right? And then I look at exactly what points did it cross the Fibonacci Bollinger Band, what point did it cross the envelope, and what points could I have found a reversal opportunity. Also, I always think of it as what was the first crossing point of these lines. And the reason I do that is because a lot of times people trick themselves when they're backtesting. And what I mean by that is they see their setup, they see it's working, and they just assume that that would have been their entry and their exit. And you guys, that is actually never the case in the real market when the market is moving, right? And another thing we know is we've got two things on this strategy that we look at. We've got the envelope, which is this bad boy, and we've got the Fibonacci bands, which is this. So when we're looking at the envelope, we know it's a repainting indicator. So that is actually not our first signal, right? Our first signal is going to be the Fibonacci Bollinger Bands. Like for this example, this one would have signaled along for us. But as you can see here, it had a complete stomp out. So we would have lost on this one, even though we also crossed the envelope. But it did have a reversal. So if we would have caught any of these bottom points, we could have easily cleaned a 3.2%. And remember, I use high leverage, so I want that 3% gain. I want that 2% gain even, because those are still profitable numbers at a higher leverage capability. If you're going to use lower leverage, then you're going to need a bigger balance to be able to make moves in a market like this, right? But I like the lower leverage, so I'm not using as much money and margin consistently. I'm always risking the same thing. And I do use cross margin or cross leverage. Please be cautious when you're using cross leverage. You need to have a stop loss because the market could do one of these things where it just crashes completely in under 5 minutes, right? And you're wiping out your account, which is unnecessary. So the trick to that is to always have a stop loss and be prepared to manage your trade. Now, when we're looking at backtesting on something like this, so first step, we know that this would have been a stomp out. So we would have lost this one because our stop loss is always about 1%. The max I'll ever do is 2%. So from our first entry here, right, because we would have entered right here, we would have 100% been stomped out. So we can count that one as a loss. A good way I like to do that, you guys, is I'll put the position in of where that first entry would have been, where the stop loss would have been, and the cap on my stop losses is 1%. I never want to lose more than 5 times the margin if I'm using 500x. If you don't know the math on them real quick, I did make a previous video where I went through the spreadsheet breaking down the exact expense on a trade, how much risk I'm risking, and why I do it that way, because you need to know your margin to leverage ratio. And what I mean by that is how much margin you're putting in for how much leverage you're using. You need to then understand your exact stop loss to that situation, because if I wasn't using 500x in this strategy and I was only using 100x, my stop loss could actually be technically 5% at $100 margin, right? So if it's a $100 margin here, my stop loss at $100 margin with 100x leverage, and I'm willing to lose $500, my stop loss would be able to be all the way down here, which Intel would have guaranteed a win, but not too much of a win because we're going to have the trailing stop loss, right? But the negative to that is if I lose the whole 5%, it's going to take me 5 times more to be able to catch this 1% gain. And I'm going to need at least 80 to 90% win rate if I were to do it that way, right? So the goal here is to minimize my losses and maximize my gains, right? So even if my win rate is only 40%, I would much rather win $200 and only lose 100 per trade, which entail over the long run, over the course of the month, will give me a profitable month, right? So this one would have failed right here. Now we would not have actually been able to enter this one. It doesn't fit our parameters. Same with this one. This one we would have entered, right? And this one we had a couple of opportunities because it did it twice. So we're actually going to follow through with the second entry. And we'll put that one here. We've got the 1%er, right, under this. So we would not have been stomped on the 1%er. And our goal would be the 2%. But due to this position, we would have easily trailed our stop loss up. And it also looks like we would have missed this one as well. So we have just lost 2 of these trades at a $500 loss. Now this one would have been an entry, and the reason is we crossed the bands, we're waiting for the second tap, and then we're looking for that reversal, and it hit the envelope. So this one would have actually been a long position here as we've received confirmation 1% again. So we're looking at the stop here, and then this one would have been trailed. Since it is trailed, how you want to do that is you want to assume the trailing like you're really doing it, right? So we bumped up here, we would have moved it up to here. It bumped up here. We would have probably moved it up to here. To even be safer, we could put it down here, and then now it gives us the profit, which is 3%. And you guys notice here, I'm actually using worst case scenario because in the real markets, you're never going to get the best case scenario. So if you're assuming worst case scenario, you really have a chance to actually make up that difference. So what we see here is we lost 1%, we lost another 1%, but here we made 3%. So in this, we're up 1% for this back testing period. And we started this back testing period about 6 days ago, right? So it was last week, Wednesday. Today is Monday, my time here. And we're just going to keep going until we get to today. Here, we've had a hit. We've had a break on both, so we would have had a long here. Same 1%, that one's fine. And that one got all the way up to there, but remember, we're going to trail the stop loss, right? So if we're aggressive with our stop loss, we would have stopped it here. And again, if we want to do worst case scenario, I do think that would have been the one because we are managing our risk quickly. We are not just waiting for it to give us a big move to move up the trailing stop. When you're using high leverage like this, you're better off taking even the smaller wins than lowering your win rate just because it's such a high leverage strategy. The sooner you can get in and get out, the better. It's also why it's a day trading strategy, not a swing trading strategy, right? So that would have worked. On top of that, we would have had a flip, right? This would have been a good short, see, because we haven't had a short here. We hadn't had a break on the top. So here we would have had a short break and it would have occurred here. So you would have been able to do that. Same concept, the stop loss is not hit. And then this one would probably have just been a break out of here, right? Because we only had one break. So worst case scenario would have happened and it's only at 0.69%. So we would have made 1.7 on that one. And then on that short, we would have made only 0.6. Let's just round to 0.6 and 1.7. So 1.7 plus 0.6, we're at 2.3. So in this little back testing thing, we're at roughly 3.3 for the win, right? So we've got this little win at 1.7, this one at 0.6, that equals to 2.3, and then this one evens to 1% because we lost these two. So we're at 1.1% plus 2.3, so we're at 3.3% for this trading back testing session. Let me go to the next one. We had a hit again of the bands. It did not hit the envelope, so I would not count this one. This one we could count. We tapped it, and we tapped the bands twice. And remember, we're doing this on the 10-minute time frame, right? You usually want to pick one time frame that you're comfortable with. Same confident. We got the 1%. We go down here. This trailing would have easily been hit down here, right? Just because that was an immediate move. So we are up another % on this trail. And then here we had a bounce. So we could count this one as a long position. Wrong one there. And then we've got the same 1%er. And this one would be trailing. And right now, for the trailing, we technically have it right here. So right now we're going to wait and see if it breaks down through this, which would have been another 1.3%. So 1.3 plus 3.3 would have given us a 4.6% backtesting sesh. And from here to here, we are looking at roughly 5 days. So 5 days at 3%, let's round down a bit, would give you $1,500 profit on this strategy using $100 margin. Now don't forget, I like to use $250 margin, but that amplifies my risk to reward ratio. So if I had used $250 on this, each 1% we make is roughly 1,250. So at 3%, we would be at 1,200, so 2,500 plus this, we'd be at $3,700 for this. Now these losses would have amounted to about 1,250 per loss. You got to remember that, but these gains would have easily made up for it. And you guys, do you see how easy it is to actually back test a strategy and just keep playing it? You have to assume the worst probabilities, and then hope for the best as you're actually playing in the market, right? So don't ever do your back testing and just only assume, oh, I would have gotten this big win. Oh, I would have gotten I wouldn't have taken, like I've seen many people do this, right? Where they go, oh, well, I would have actually exited right here. So that's a 5%. That's not possible, right? It is. I've done it many times, but I don't consider those things skill. I consider them luck more so than skill. And yes, you have to have the skill to maybe get lucky, but the only way to be able to do that is just to keep testing, but assuming the worst, so that you're not just sitting here hoping that, oh, I would have made 5%. Then you're really playing in the market and you only walk away with a 3%er. Because at a 5%, this would have made our day at around a trading week test here at around 7%, which is a completely different number, which until also psychologically allows me to think, well, I can lose more trades to make up that. You don't want to take that risk. You want to be extremely cautious when you're doing these backtesting strategies, right? So I do hope that this video helped. Quick recap, we went over the trading psychology and understanding that it is okay to sit on the sidelines when you are not fully available to trade and be able to manage your risk profile. Because if you're using high leverage and you're day trading and scalping, you need to be okay with that. Trading is just another business. And there are days where there are no customers available, right? That's just the one way to really think about it, right? So, back here, you guys, we would have now been fully stomped out. So yes, we could account this one at the 1.3. And again, I assume the worst. The only reason we waited is because this was choppy. So we waited for a change of character, just like we did all over here. Because here we had a change of character. We moved down to here because we broke this, right? So that's why we were here. Otherwise, we would have been stomped out of. No, we actually would not have been stomped out of this one at all. We still could have been in this trade, same exact concept, but then we would have not made that 0.6%, which until does add to our profit number. So quick recap, being patient when you're trading and understanding that you need the right setup and the right play to occur before you take the risk, because you just don't want to risk your money in hopes of winning. You want to risk it with the highest probability of winning that's set up to your favor. Then second, you want to backtest your strategies consistently. And we will do a lot more of these backtesting strategies. We'll do a full market check every time I'm getting ready to do my day trading session. So like right now, I've got a little bit more travel, so I will not be available to trade probably rest of day. But if we get back in time, I'll first do a full market check. And what that basically means is I will go through all of the markets that I trade here consistently and update all of my support and resistance lines, because the market is dynamic. It doesn't just sit in one spot. So I want to be adaptive and be able to understand what I assume is happening next with a good drawing setup for my trend lines, my stops, and my entries, right? So I do hope that this video helped you guys today. If it did, please do me a favor and hit that subscribe button. It would mean the world to me. And if you guys have any questions, like I always say, do not be afraid to reach out. Let me know what you're thinking. Thank you so much for watching the channel. I'll see you guys on my next trade. Peace.